All right, folks, welcome back to the ICT Mentorship Daily Log Entry for Monday, March 22nd, 2021. We'll be looking at the 15-minute time frame for the dollar, euro, and pound. All right, this is going to be a really short video today. So, as I mentioned on this weekend, I wasn't sure how we were going to open up on Sunday. I gave you the levels I was interested in, and while we didn't get what I was hoping to see on a bias going into Monday, because I was looking for a little bit of upside on dollar, the only thing that happened was that a gap up in here, optimal trade entry on this level here, broke down, bearish breaker, trades into the fair value gap, consequent encroachment, sells off this fair value gap, low, high, extend that through these candles here. You have a high, low, optimal trade entry with fair value gap with New York open. This sell off in here and attacking this low was the premise I was using for a London close setup for euro dollar. And I shared that on my Telegram channel this afternoon, so you can go take a look at that. Euro dollar, 15-minute time frame. Short-term low, rejection block, extended out in time. During the London open kill zone overnight, we swept that, created a low of the day, relative equal highs, price drew up into that, came back down in, breaker, rallies, bullish order block, trades back down into it between the kill zones, creates an order block here, rallies, doesn't quite get down into the order block, but we have a fair value gap and optimal trade entry. Mitigation, the high between a low and a higher low. If this low would have went below this one, this would have been a breaker, but it's a mitigation block, extending it in time. We have a bullish candle here that creates a small little fair value gap. Trade down to that, and this is what I was keying off of on that 1-minute chart. So the mitigation block, the fact that we only had a little shallow run above the relative equal highs. I'm not showing this in that recording on Telegram, by the way. So I'm giving you this as details that isn't shown there. So when it traded down here, I was going long with the premise that was optimal trade entry, which is also closing in this buy side unbalanced, sell side inefficiency within a mitigation block and closing the fair value gap shown here on the 15-minute time frame. And I wanted to see a more pronounced run above the relative equal highs. And if you look at your 60-minute chart, you'll see this level. It's pretty obvious. You can't miss it. And I actually had it highlighted in the weekend commentary. The market rallied up. I was trying to get to 119.50 in my mind. I was thinking it could potentially trade up to there, but you can see in the video I had a limit order just below that, like 119.48 something, and it failed to get there, but I took several partials along the way. And all through here, it's a nice little study if you look at that 1-minute chart markup I did and paper trade through the TradingView platform. All right, here's the British pound, the 15-minute time frame. This pair just didn't give me anything that I felt comfortable with, so everything here is absolutely hindsight, whereas everything in the euro dollar, I had all that marked up and it was there before it happened. This pair I was not comfortable with at all, so everything here is completely hindsight. Just the only thing that I think is relevant, short-term low here, last down close candle prior to that, rallies up, creates a 3 drives pattern or 3 Indians pattern if you're a fan of the Street Smarts book by Linda Rashkin and Larry Connors. Creates the higher high between the kill zones just ahead of New York open. Cascades lower, taking out sell side liquidity here into the bullish order block there at New York open. Trades higher, trades back down into the last down close candle here, bullish order block, then rallies back up into the last up close candle here for a bearish order block, and then consolidated with a fair value gap. So I'm watching to see if we accumulate in here to take out the buy side liquidity resting above this high. Nothing in here is terribly exciting. It looks as if it wants to go higher, so that'll be a short-term bias I'll work with, observing what cable's doing, but we'll see what we get. Dollar needs to obviously continue going lower for this to be ideal, but The overall market structure that this pair has right here in the 15-minute time frame is not, in my mind, high probability either direction. Okay, because we do have a small buy side unbalance, sell side inefficiency down here that we could just drift down into that. If it did that and then started a rally overnight in London and left this high untapped, then that might be a scenario that I would look for New York tomorrow as a practice session. So you can look for maybe a long, if it filled this in overnight and still stays above it going into New York Open, that would be some kind of a framework that I would use for cable tomorrow on Tuesday. But we have Chairman Powell speaking again. He was slated to speak today, and I think he talks tomorrow and on Wednesday. So everyone's waiting to see what he's going to say, and then the central banks will obviously do what they want to do regardless of whatever he says. So bear that in mind, and I'll touch base with you tomorrow for another daily log entry. Until then, be safe.